Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving right into. The last day of the trading week ends down. Fears of renewed tensions between the U.S. and China sparking a sell-off. All major indices did end the day lower. Gen Z and millennials are gaining economic influence globally. We're speaking with an expert on new data in this shift. And it looks like conditions are ripe for home buyers. According to a new report, the timing and cost may not get any better than right now to purchase. We're talking with a housing expert. Well, there is a generational shift in the global economy, and Morgan Stanley is tracking that shift, outlining how Gen Z and millennials are gaining economic influence. And here to break it all down is Jitanya Kandari, Morgan Stanley Deputy CIO of the Solutions and Multi-Asset Group and head of Macro Thematic Research Emerging Markets Equity. Jitanya, it is good to see you. So let's talk demographics, Jitanya. I want to focus on millennials and Gen Z. Just remind us, as investors, Jitanya, why do we need to pay attention to these groups? You know, how many of them are there? How important are they? How much are they spending globally?
So Gen Z and millennials are nearly 48% of the global population today. So they are a big cohort. And understanding their consumption trends has become even more important because we find a lot of differences emerging in the way they consume and the way they live and their overall lifestyle. So this cohort is definitely focusing more on value-based shopping. We know that a lot of the luxury brands those companies are not really doing well. Of course, there is a headwind from the Chinese consumption, but you also have this generational issue where a large part of this population is focused on value shopping and non-branded local brands. Secondly, they are digital natives, so they like consuming in that ecosystem, whether it's e-commerce, whether it's travel, it's leisure, it's entertainment, gaming, fintech. A lot of their consumption habits, a lot of what they consume, they buy, they experience is happening in the digital world. So it's important to keep in mind how we invest in those companies. And lastly, they love experiences more than possessions. Which is also a reason they haven't really bought too many homes. They're living in the basements of their parents. Some of that can change, but structurally, it feels like it's more experiential living rather than possessions, which the older generations used to prefer.
And Jitanya, you say here Gen Z preferences, driving growth in, you say, peer-to-peer marketplaces and curated resale platforms. Any examples there, Jitanya, of what you mean?
Yes, Depop, they're influenced by a lot of these resale platforms, and some of these platforms have huge market sizes. Like I think it's $170 billion resale market, and they are a big part of that consumer cohort. I'd say even things like value shopping, where a lot of the diamond industry in the past, people used to just prefer real diamonds, and now the lab-grown diamonds are becoming a significant share. I think the recent data is saying that's 50% of engagement rings today are from lab-grown diamonds. So there are interesting anecdotes that reinforce some of these trends, and it's really important to be investing in portfolios and finding this alpha in this new generation and understanding how they consume and building portfolios based on not only economic cycles, but human timelines as well.
And when we talk about Gen Z and millennials, so we were going over there what they're consuming and spending on, Jitanya, do we have line of sight into what they're investing in? What are the broader trends, the themes that excite them?
So as I said, they are digital natives. A large part of some of the transactions in bitcoins, etc., is the newer generation because they are comfortable buying, selling on their apps. So it is definitely differentiated from the past generations that have historically bought gold as a safe haven asset. We are seeing a lot of the numbers on like the Bitcoin and fintech kind of platforms dominated by this age cohort.
And so I guess, Jitanya, when you study the Gen Z and millennials and you're studying, what they're consuming and spending on and investing in, would you expect the trends to persist, Jitanya, or do you think, no, they would shift as these folks actually get older?
I think these are generational shifts. I think these trends will persist. I'd say they also are very focused on ethics and sustainability, though that's an important part of their thinking and their consumption habits. And these things will last. And therefore, really understanding, which companies are suited for their preferences is the way forward. But the other thing I'd say is it's a large part of this Gen Z millennials live in emerging markets. I think it's like the stat is about nearly 89% live in some of these markets where demographics are more tailwinds. So it's also important to understand where they reside because that will determine more longer term structural patterns.
Jitanya, great to see and to have you on the show today. Thanks so much for your time. Stick around, much more Ask for a Trend still to come. President Trump's renewed tariff threats spooking Wall Street. The S&P 500 and the Nasdaq seeing their worst day since April as the Dow sinks 800 points. Yahoo Finance's Jared Blikre joins us now with the trading day takeaways. Jared.
Josh, October is now turning negative, and that's because of that outsized underperformance, or I guess sell-off that we saw earlier today. And this was the first 2% down day that we've seen in the S&P 500 since April. That kind of generates its own headlines because people who watch those kinds of metrics think certain things about what they're going to do with that. Are they going to buy the dip? Are they going to look for a more protracted sell-off? But let's focus on the damage done today. XLK, that's tech, down the most. That was down 4%. And then just taking a look at my leaders, you don't have to concentrate on the particulars except KWeb, that's China Internet. That's not surprisingly down the most because that was the source of the headlines that we saw earlier. The only thing in the green, safe corporate bonds and low volatility. So it was really, really risk off today, but not entirely unexpected.
So, dip buying opportunity, my friend, or no, or start of a larger pullback.
Yeah, I think that's entirely in Trump's hands right now because he controls the narrative. And if you remember what happened right after Liberation Day, we only saw a mild sell-off. And in fact, what happened was rates went down. And that's one of the things I'm watching right now. We had a big drop in rates. That's 10-year down 10 basis points. But then as things got worse than people expected, rates went the opposite way. That meant that people were dumping bonds as they were dumping the dollar. And so that's something that I'm going to be watching out for next week. But so far, that's not the case. So to put it very succinctly, I think this is more of a one-off, and I do think people are going to come in and buy the dip. The question is, do they get run over? That can only be answered by President Trump right now. Mm-hmm.
We move on.
Yes, we do. So let's take a look at volatility here, because that's the second thing in my playbook. And the VIX now, it just climbed above 20, and we haven't seen a handle like that, I think, since April. And that's not surprising because that was a post-Liberation Day regime. But what you're going to notice in this year-to-date chart is we are nowhere near the highs that we saw earlier, and that was in the wake of all that. Even at the worst sell-off, I think we got a 60 handle in the VIX. So today is just a minor shadow of that. It's really going to take a lot more than just this one day to produce more fear. And remember, the VIX is not necessarily a fear gauge, as Steve Sosnick likes to say. It's a measure of institutional hedging activity. So the big guys, they're a little bit scared, but they're not too scared. They're not too disrupted right now. I think they're going to jump back early in the market next week. Do they get run over? That's a big question, but I'll be watching rates for that answer.
Should we do a quick check on gold here?
You bet, because with gold, oh, you know what? I forgot I had a volatility map. This is, so I just want to rewind a little bit. This is what usually happens with the VIX during the year, and this is prime time spike season. So this is not entirely a surprise. We were just talking a few days ago about how the VIX had started turning up. Well, now we got the catalyst. So this would be par for the course for volatility. Now we can check gold,
now let's
right?
talk some yellow.
All right, right.
Come on.
4,000, is it a sticking point? I got a really interesting note from Todd Sohn over at Strategas ETF Research. He tracks ETF flows, and one of the things that he noticed is that, let me just pull up a year-to-date chart of gold so we can all ogle that as I talk here. He says that if you go back to 2020, we had a big spike in gold, and if you track the one-year flows, they reached $38 billion. Well, we are at that inflection point right now. What happened in 2020 when we hit that point? The gold prices rolled over. So that's a yellow caution flag. I think there are tremendous tailwinds for gold right now. I would definitely not short it. If you own it, congratulations. But just know that around this price level, 4,000, things could go sideways for a little bit. Same for silver.
What's on your radar next week?
I'm really going to be watching the rates market. I don't want to see rates turn higher and especially spike higher day after day. That tells me that people are dumping the US dollar and they're dumping bonds again, and that's going to cause a lot more trouble for equities. If that doesn't happen, I think we're going to see tremendous dip buying.
All right, thank you, buddy.
You bet.
Appreciate it. Stick around, much more Ask for a Trend still to come. Well, it looks like the keys to the housing market might finally be turning in buyers' favor. A report from Realtor.com says the week of October 12th through the 18th is the best time all year to buy a home, with more listings and less competition on the block. For more, I'm going to bring in here Danielle Hale, chief economist at Realtor.com. Danielle, it is good to see you as always. So your research shows, Danielle, mid-October, the best week of the year to buy a home. Why is that, Danielle? Explain the trend, and do you think it'll be true this year?
Yeah, thanks for having me, Josh. So it's good to talk about the best week of the year to buy a home. It's October 12th through 18th this year. It's based on historical seasonal trends that we see in the housing market. People who are not actively involved in the housing market may not realize, but the housing market is a very seasonal industry. We know about Black Friday and Christmas and other holiday sales. The housing market actually follows similar patterns, not timed around Christmas, but timed around the spring and summer home buying season. As we move into the fall, we see buyer competition cool off, but this early fall week is advantageous for buyers because we've still got enough home sellers on the market to make their options available for buyers. And so we see less competition, better pricing power for buyers who can still find what they want before we move closer to the end of the year.
And Danielle, are there certain areas of the country, certain regions where this trend is more prevalent and pronounced than others, or no, this is a true national theme?
It's really nationwide because it's not driven just by temperatures and weather patterns, but by school patterns. So a lot of families who have young children who are often in the housing market want to move in the spring and summer so that their kids can be settled before they start school. So that's one of the big reasons why we see this pattern in the housing market. And then, of course, weather conditions can exacerbate that in some markets. When we look at the best week, that is the case nationwide mid-October. And in 21 of the 50 largest markets, it's the exact same week is the best time to buy. And many of the other 50 largest markets are very close, a week or two before or after this best time to buy.
If I did buy now, Danielle, how much would I typically save versus summer or spring?
So based on the nationwide average, relative to the peak price that we saw this summer or spring, which is about $440,000, you're looking at a savings of about $15,000. So that's based on lower pricing that we typically see at this time of year, and you'll have fewer buyers on the market to sort of elbow out as you're competing for homes. So that's another advantage for this best time to buy week.
And how, Danielle, should sellers be thinking about all this? I mean, how should they be responding and strategizing if they know buyers have this kind of seasonal leverage?
Yeah, so the best time to sell is typically in the spring. So this is not the most advantageous season for sellers But that doesn't mean that they can't sell a home. There are still buyers in the market, but they do want to be mindful of the competition. One of the reasons that this week can be a good time for buyers is that there are still a good number of sellers on the market. So if you're going to sell your home now, you want to make sure that you price mindfully in line with the competition. Keep in mind that because there are fewer buyers in the market, you might have to be a little bit more flexible and react if your price doesn't land and you don't get offers quickly. So keep that pricing power in mind. And then if you are really anchored to a certain price and you want to make sure you hit that price, you can also consider waiting until the spring to list your home for sale. Though we're not seeing that many sellers do that so far. We have seen new listing growth, which is an indicator of seller activity, kind of keep on pace with what we saw last year. It was actually a little bit up this week in the latest data. So it does seem that sellers are still interested. And if you are interested in selling this year as opposed to waiting, the sooner you list in the season, the better your conditions.
Beyond just this best week, Danielle, how does the fall broadly look for the industry? How's it shaping up?
Yeah, so the housing market had a relatively slow spring and summer season. Home sales have been relatively low, but as we've seen mortgage rates come down, coinciding with the first Fed cut of what we hope will be many, we're seeing buyers get back into the market, and I expect that we'll see home sales pick up again as we move into the fall. So even though this is seasonally the best time to buy because we have slower buyer competition, we are likely to see a more active fall buying season because of those lower mortgage rates finally bringing some relief. Mortgage rates have been down below 6.5% for only the fifth week in a row in 2025. Which is a little bit longer than we saw them get down to this threshold last year. So those who've been waiting not only get the best time to buy, but also a little bit of mortgage rate relief right now.
Yeah, I'm just looking here, Danielle, 30-year fixed, 6.32 according to Mortgage News Daily. Where do you think we are, Danielle, 6 months from now, 12 months from now?
I think we're going to hold in this pattern, not very far off from the low 6% as we get towards the end of the year, and probably get a little bit closer to that 6% range as we move into next year. I don't see mortgage rates moving a whole lot lower below that because we've got the 10-year Treasury that seems to be stuck at 4%, which is about where I expect it to be in the long run. So even though we expect to see some Fed easing, I think a lot of that easing is already priced in, and it will not necessarily translate into lower longer term rates because we've got considerations about trade policy and fiscal policy that I think will keep those longer term rates from moving too much lower.
Danielle, always good to see you. Always good to have you on the show. Enjoy the weekend.
Thanks, you too, Josh.
Well, that is a wrap on today's Ask for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet.